Good morning from London. I'm Anna Edwards alongside Guy Johnson and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Polish officials hold an emergency cabinet meeting to discuss the violation of its airspace by Russian drones. The country condemns the move by Russia as an act of aggression. President Trump says he's unhappy with Israel after it carried out airstrikes on Hamas leaders in the Qatari capital of Doha. Plus, Oracle's outlook fuels AI optimism. The database company stuns Wall Street with an aggressive outlook for its cloud revenues. Investors send shares soaring, adding $190 billion to the company's value.
Well, Anna, today's the day that we look at the inflation side of the ledger stateside. The jobs numbers have fueled the Fed cut bets, pushing stocks to near all-time highs and futures pointing even higher, both in the US and in Europe today. We've got euro-dollar at a 117 handle with a new prime minister named in France, and oil higher today as we keep geopolitics in focus. We have to watch what's happened in Qatar, Israel striking Hamas. We have to watch what has happened in Poland with the Russian drone incursion. That could keep a lid on European sentiment today. The countdown to the opening trade starts right now.
Wednesday morning, good morning. Normally, the lead story is quite straightforward on this show. It's fairly easy to spot. Today, I think there could be 6 or 7 of them. There is a lot going on out there. You've got geopolitical news, Lizzie's just talked about it. You've got Fed news, Lisa Cook, what's happening there. What the story is when it comes to the data is also going to be a big factor in today's session. And you've got corporate news. You've got Synopsys, you've got Oracle, you've got Novo Nordisk, you've got Inditex, all stories that we could talk about this morning. So there's a lot going on. Which way the market looks, I think, is still to be determined. But let's start with this Polish story, because as Lizzie says, I think this could keep a lid on sentiment today. Just brings it a little bit closer, the Ukrainian war, to the European narrative.
Yes, and to the NATO narrative as well, crucially, doesn't it? So let's start with Poland. And we start with it because of all the reasons you described there, Guy, but also because a cabinet meeting has been called in Poland, and that is set to take place now, to start right now. So right now they're scrambling to get the cabinet together. Last night they were scrambling jets to fend off drones from Russia. Now, whether these were deliberately sent into Poland or this was some effect of what was taking place in Ukraine is yet to be understood. We haven't heard from Russia on that. And no White House response on this. It's been so busy over the last 24 hours, probably, in geopolitical news flow, that we haven't managed to get any White House response yet on this one. But Poland calling it an act of aggression, shooting down some of the drones. Prime Minister Tusk says, crucially, that he is in contact with Mark Rutte over at NATO, because let's remember, Poland is not Ukraine. This would raise the stakes.
Yeah, so he says that Putin's testing Poland's resolve here, and you have to take this seriously, obviously, given all of the carnage in Ukraine. It really puts the pressure on Ursula von der Leyen today. She's giving her State of the Union address. Yep. You've got not only, France in chaos, not only the European Union kind of left out of the talks between Russia and the US when it comes to Ukraine, but just a weaker Europe overall. She needs to push this message militarily, and what a day to be doing it, given these strikes in Poland.
Probably an accident, but as you say, that doesn't matter. The level of attacks that are going into Ukraine probably suggests that at some point errors are going to be made. But conflicts start with errors. And miscalculations can be a big factor in the way that conflicts evolve. You've certainly seen that throughout the history of Europe. Or you could take the view that this is a test. I don't know is the honest answer. But as you say, Lizzie, you have to take it seriously. Does this change anything on the ground at this point? I doubt it. Does it change the narrative in terms of defence spending? I doubt it, but it just reinforces what is already starting to take place in Europe, and that is that Europe needs to rearm. Poland is on the front line. Yeah. This just reinforces that narrative once again.
And we've had report after report of Russia messing with aviation, wayfinding technology. Now, this is they had to close Warsaw Airport as a result of this, as you'd expect, because of the drone attacks. So this is it just increasingly at the margin affecting what's happening in Europe as well. And then you think about what reaction function we're going to see from the US administration here, and we already heard, we had some reporting that predated these events in Poland that suggested that President Trump is coming more round to the idea that if Europe is stepping up sanctions on Russia, then on secondary sanctions, on those who buy Russian products, then he is prepared to follow suit, and that means India and China.
Yeah, and he's saying EU nations have to do the same, but it puts the likes of Hungary in the spotlight because they're perhaps not going to be willing to do this. And remember that the deadline for Putin to have this bilateral with Zelensky has come and gone. So it speaks to the weakness of Donald Trump here, which takes us on to what's happened in Qatar. Because the frustration emanating from Washington that they didn't get enough warning of the fact that Israel was going to be striking the Hamas leadership in Qatar to stop it.
In some ways, there's a parallel between these two events. You've had Russia striking potentially Poland, and you've got Israel striking Qatar. Now, whether or not both were deliberate, I don't know. But clearly one was deliberate. The Israelis striking Doha. You lived in Doha. Can you imagine being in Doha when this was happening?
Yeah, this is petrifying. Yeah.
Absolutely petrifying. So
and as much as you understand that it is targeted at specific individuals, is still... It's enough to frighten and to provoke serious response from the government of Qatar and the governments of the other nations around, some of whom have Abraham Accords with the United States.
Precisely. So you think about, if you... this is not a one-for-one, but Abraham Accords, kind of the relationship with the United States, what happens in Europe with NATO and Article 5, and the kind of the parallels, I think, are fairly clear. Israel has made that decision that it is going to strike Doha, which I think is a huge move in terms of changing the narrative around what happens in Gaza and the relationship between the Gulf states and Israel. And you wonder kind of what the motivation was, because this is such an obvious and clear escalation. The Russian escalation is sort of clouded in mystery a little bit. Did they, didn't they? Is this deliberate? Is this not deliberate? This is blatant and obvious and is a clear escalation. What follows, I think, is really difficult to call, because I think it also changes the narrative around the Gulf states, who are seeing increasingly the conflict with Iran becoming closer to them, the conflict in Gaza and Israel increasingly coming towards them. How do they respond?
Yeah.
That they rely on the fact that they don't get caught up. Can you imagine this happening in Dubai? Can you imagine this happening in Doha? This is... there's no reflection in Dubai house prices that there is any concern here, but it's getting closer and closer.
It is, and Emmanuel Macron and the European response reflecting some of that concern about the regional spread of conflict. And Emmanuel Macron making that very point that we should not allow tensions with Israel and between Israel and others to spread more regionally.
But this is exactly why you've had such an enraged response from the UAE as well as from Doha, because of the idea that expats will now be awake, very awake to the worries about their safety being here. You know, the US airbase in Doha is the biggest in the Middle East. You know, there is a deal with the devil, as it is put, that Doha has this relationship with US security. If they cannot rely on the US to prevent things like that, it completely changes the game.
And this has been a location for some time where groups that some governments around the world deem to be terror organisations can go to negotiate. So we've seen it most recently with Hamas. And so the role that Qatar can play in that mediation story is certainly in focus. There's so much going on geopolitically. It's amazing to see that European futures are up a little this morning. Does it put a lid on them, as you've rightly been saying? Oil prices did spike on this Middle East tension yesterday, then retreated, now up again 0.9%.
But we have to talk about the tech story, because that is also what has powered global stocks to these near record highs. They're on the front foot for another sixth day today, and this comes back to Oracle. So the share's hitting a record, up 28% in extended trading on this aggressive outlook for its cloud business. It's pulled all the AI-related stocks higher, not just in the US, but also in the Asian session as well. We look out for the ripple effects into the European session. But the bottom line here is, you know, post the ChatGPT global AI infrastructure boom, it seems to be carrying on, building out. Can
I speak? When I saw the Oracle numbers last night, the first thing that crosses is the revenue lines. Oracle numbers missed. They missed expectations. And then they produced this shiny kind of forward
Bookings
guidance. Wow, it's going to be amazing. Don't look over here, look over here. You just there's a little bit of that narrative, I think, in the numbers this morning, and I think it is going to ripple into Europe. I just want to flag as well that Synopsys, which is a chip stock, was out with numbers last night. It is heavily down. So I do wonder whether or not there is some ripple effect of that into Europe as well. So it's going to be interesting to see how the Synopsis Oracle story kind of balance themselves out.
And then TSMC August sales up 34%.
Yeah.
Another sign, though, of that solid AI demand.
Yes, and some people are convinced. I mean, some of the analysts on the call yesterday with Oracle apparently were so shocked they could barely speak. We're all in shock, said the Deutsche Bank analyst on the investor call with the management.
Yeah.
I mean, that's not usually the kind of flattery that you get on those kind of those challenging venues. But I will just say, Oracle's share price performance after hours, if that is justified, or if that follows through rather into day trading today, it'll be the largest single-day surge since when? 1999. And I don't need to finish that thought, perhaps. Do I?
A good year. The end.
Yes, that was a good year.
Yeah.
What game wasn't? Camilla Astaborga is going to be joining us in a moment. Senior Portfolio Manager, EFG Asset Management. And Nabil Melali is a Portfolio Manager, Edmund de Rothschild Asset Management. Joining us later, Maria Manucci, Fund Manager at M&G Investments, joining us. And Ali Rosen, former advisor to the UK Business and Trade Secretary and Director of SEC Newgate. Joining us to talk about what we're going to hear from the President of the European Commission and what VDL is going to say today and how important this speech is. That starts in 49 minutes. We'll bring you some of that speech as well live.
Elsewhere on the agenda today, we've got at 12:45 p.m. a speech from the SNB's Martin Schlegel. Interesting to listen to him because he said that there's a high bar to cut into negative territory because of the impact on savers and pension funds. So we gauge that against the 39% US tariffs, of course. Then at 1:30 p.m, as I've said, we've got the US PPI numbers expected to have dropped from 0.9% to 0.3% in August. This, of course, ahead of the CPI data tomorrow. And then at 6 p.m, I should say, we have US 10-year note auction coming as well. $39 billion worth of that. But really the focus turning to inflation today.
Is it? Do I care? Why do I care? 25 basis points is nailed down.
Trying to care about the inflation data. We might.
We might. I'm trying to, though. But I can't see how. Lisa Cook doesn't change the agenda when it comes to the Fed, it seems. Like she's going to vote. She's going to be there. She's going to vote. All that sort of 25 basis points still looks like it's locked in. How big would the number need to be on inflation over the next couple of days to change the narrative around?
But it could really shine a light on the dilemma.
Maybe.
If that was one. And there's a couple of the elements of the PPI that filter through into the PCE, which is the one, of course, that the Fed really looks at: portfolio management fees, hospital costs. Both of those are going to be closely watched because both of those are expected to go higher. So if that pushes PCE higher, then there you go.
And maybe the PPI and the CPI numbers don't change the size of the cut or the fact that they get a cut in September. But maybe it changes the language around that cut and the pace of cuts beyond it.
Yeah, the hawkish or dovish nature of it, perhaps.
Maybe. It doesn't feel like that at the moment.
I think we failed.
I think the Fed is going to cut. It's like the AI trade is still on. The Fed is going to cut. Basically, stocks have got what they need to continue to go higher. And I think that is the overall narrative here. Does this change the bond market? Maybe a little bit at the margin. The US clearly needs nominal growth. It needs some inflation, quite a lot of inflation given the debt loads, and it needs stocks to continue going higher. All of those kind of pieces in the puzzle are in place at the moment.
You square that with the deteriorating labour market picture, which was really emphasised yesterday. That's got Jamie Dimon saying, look, the economy is weakening. Is it weakening to a recession? I don't know, but it is certainly weakening. And you set that next to some of the positives.
This data was so long ago.
Yeah.
It was, but it completely changes the narrative about the Trump inheritance. It is important politically. And what a number, 911,000. Okay, yeah. It's significant, that.
If you're a portfolio manager and sitting down this morning, how does it change what you are doing, is my question.
I've seen two different arguments. Some say, as you say, the inheritance was worse, the jobs picture is worse, that means more cuts. Others saying, and Anna Wong was saying this ahead of the numbers yesterday, you can make the argument that maybe you're through the job cuts more quickly and that the worst is over, which is a different story.
The economy is reaccelerating, new cycle, positive.
Yeah.
You could read this positively quite easily, I think.
All of these numbers will just change how much panic there is when the Fed actually cuts in the stock market.
Panic?
Well,
I think
is there panic
euphoria,
or not?
Depending on... or maybe we've already priced it in and maybe actually there is, therefore, panic that you need to deal with other things. What else do you need to know this Wednesday morning? As I say, there's a lot going on. The French President, Emmanuel Macron, has named longtime ally Sebastien Lecornu to be the country's new Prime Minister. Lecornu will become the country's 5th Prime Minister in 2 years and will be tasked with steering the budget cuts through a divided parliament. A judge has temporarily blocked President Trump from removing Federal Reserve Governor Lisa Cook. The ruling allows her to remain in her job as she challenges the president's efforts to oust her over allegations of mortgage fraud. And Novo Nordisk, this is new news this morning, says it will cut 9,000 jobs globally by the end of the year. The Danish pharma giant aims to save $1.3 billion with a company-wide transformation. Novo also made a third cut to its profit forecast for the year. It's interesting that GLP-1 bubble has definitely burst. You look at the fact that it is increasingly a commoditized product, that Novo Nordisk struggled because of its inability to produce early on in that story to stamp its authority on that market.
It's a fine example of that bubble being completely coming at a completely different time to the demand. I mean, there's no sense that demand will dry up for these products, but as you say, commoditized US generics, that competition.
Yeah, 5,000 of these 9,000 job cuts are going to come in Denmark.
Yeah.
Just a reminder of how crucial this company is to that economy and the risks of relying on one corporate champion.
Coming up on the programme then, France's new Premier, Sebastien Lecornu, faces mass protests on his first day in office, underscoring the daunting task that awaits him. We'll have the latest from Paris. Plus, President Trump tells European officials he's willing to impose new tariffs on India and China to push President Putin to the negotiating table with Ukraine, but only if EU nations do the same. Up next, Jamie Dimon says the US economy is weakening after the record jobs data revision. We'll have more on what it all signals for the future of Fed policy. Lots of that conversation coming up. If you want to get in touch with us, please use IB plus BBTV Go, those functions on the Bloomberg terminal. This is Bloomberg.
Forty minutes to the opening trade here in Europe this morning. Obviously, a little less for the bond markets. We'll be touching on that in just a moment. But there is a lot going on this morning. Let's turn to what is happening in the fixed income universe. Donald Trump has been blocked from blocking Fed Governor Lisa Cook from voting at the September meeting. She's fighting allegations of mortgage fraud. Let's figure out why this is significant. Does it change the narrative on the September Fed meeting? I'm not sure. Valerie Totel, what's your view?
Look, I thought it was very interesting, given the reasons why the Fed is, or why the judge is allowing Lisa Cook to stay on as sitting governor. He was ruling, in his opinion, that it's only her conduct on the job that matters. And given that these mortgage fraud allegations happened a year before she became a sitting Fed governor, he's essentially arguing that Trump does not have cause to remove her. Now, this is a very important case, Guy, not just for Lisa Cook, but also for the broader narrative around Fed independence. The Federal Reserve Act back in 1913 does give the sitting president the power to remove the Fed governor for cause, but there's still a lot of questions, a lot of ambiguity about what actually justifies the cause. We'll be paying a lot of attention to that court case, likely to land on the Supreme Court's desk sometime soon. We also had quite a stunning revision downwards of the non-farm payroll survey from the Bureau of Labor Statistics, as you guys were mentioning, the biggest on record. But I thought it was interesting to hear what Scott Bessent had to say after these revisions, telling Fox Business essentially this is upping the ante for his call of an audit of the Federal Reserve, given the central bank claims they're data dependent and the data they're depending on is this poor. Is that really the way we want to be conducting monetary policy? He also said that this data, this revision shows that maybe perhaps the Fed size of that rate cut next week needs to be recalibrated. So he came very close to calling for a 50 basis point rate cut yesterday, talking to Fox Business. But again, he also said that this is choking off the U.S. economy. But the one thing clearly, Guy, that is not choking off is this AI trade with Oracle absolutely stunning Wall Street, leaving analysts speechless on their guidance for cloud revenue, surging 28% in after-hours trade. Guy, you can argue that maybe higher rates are choking off some part of the U.S. economy, but is not denting the AI trade.
Can they deliver that? Is there enough electricity? Is there enough water? Is there enough stuff to build all of the data centres that are going to require. It's just amazing. The numbers are absolutely eye-popping. Valerie, thank you very much indeed. Joining us now, Camilla Astabaroga, Senior Portfolio Manager at EFG Asset Management. Good morning.
Good morning. Thanks for having me.
Nice to see you. There's a lot. It's a really busy day today, and there's an awful lot going on. But a number of things have remained the same. Equity markets are at record highs. Gold's at highs, which strikes me as being a little bit odd. Spreads are still super tight. All of these things are still constant. Nothing seems to knock any of these off course. Can you see anything that does? Are we at anywhere near an inflection point?
I mean, it is crazy. The complacency of the market is usually you cannot see equity being so high and gold being so high. They don't make sense. You know, they should not move on the same side. I do believe this is a pivotal moment. Honestly, it does feel like back from school, loads of news. I think people are struggling to absorb all this news, and sometimes are not together and seeing what is more important, what is less. So in fixed income, people are still usually looking at yields rather than spreads, and they still feel comfortable relatively with yields, especially because the Fed and other central banks have space to move. So still like restrictive, so they feel okay. And the data is not awful, so they're like, well, this can continue for a long time. But for me, like the marginal compensation for risk is so tight at the moment, at the lowest ever, that why would you take the risk? You know, we have seen it in the past in 2010 when bonds, the 10-year bonds of all European countries were trading at the same level, despite their actual affordability of debt, despite their capacity of debt. In emerging markets has happened the same, and this is because of how the benchmarks are composed, because of preference of the markets, because of liquidity.
Okay.
But then when something happens, then you see that divergence between fundamentals.
Yes, so actual risk maybe not reflected in some of the pricing right
100%.
now. So let me ask you about one of the other big themes of the morning, and that around the Oracle story, another reminder of the huge amount of money going into AI development and infrastructure, and the potential perhaps this might be a massive structural change, might be a huge structural change for the global economy. If it is, how does it feature in your world, Camilla? I mean, is this an inflation story, a growth story? Does it not matter because the Fed's cutting? I mean, what's the read across?
I really think this is a much needed story, because with demographics going down so much, we need someone to pick up that, that loss of potential jobs in the future. So I think that definitely is something needed for growth to continue, for productivity to continue. I see it more as a long-term trend. It's definitely something that's going to stay for a long time, and it will impact more U.S. Treasury curve. At the moment, the short part of the curve is moving, of course, on monetary policy, but the long part of the curve has actually stayed quite sticky, and this is because of more supply expected, because, of course, the massive deficits that are going on. But I think it's also because of these kind of inflationary trends that could impact on the future. Although you could also see it as a deflationary trend.
Yes, I mean, other technology has been, hasn't it? Yeah.
Well, speaking of those massive deficits, I want to bring it to Europe. Yesterday, you had French borrowing costs topping Italy's for the first time in Eurozone history.
Is France periphery now?
Yeah, that was exactly my question. Is France the new Italy?
Honestly, I don't want to sound too emerging market, but if you would just look at the data and hide the name of France, you would say, oh, this is an emerging market, 100%.
Okay, wow. For our French viewers, just switch off now.
Sorry, yeah. 4 PMs in the last 2 years, massive political issues, a lot of deficits, increase of debt. I mean, I don't see a lot of differences, really. So, sometimes we think, is debt so blind? We are so comfortable with some countries. Of course, they do have more institutionalism and other positives than other EM countries that are more reliant on external debt. But it is something problematic, and I think that people are going to start asking for more compensation for risk. I mean, they have already done it, and I think that they will continue doing so.
Yeah, Maloney's got a €13 billion windfall because of her lower yields.
Yeah.
Anyway, good to see you, Camilla. Camilla Astabaroga, Senior Portfolio Manager at EFG Asset Management. Always good to have you. Coming up on the programme, French President Emmanuel Macron has picked a new French Prime Minister, and that's Sebastien Lecornu. Who is he, and what does he mean for markets? We'll tell you next. This is Bloomberg.
Welcome back, everybody. This is the opening trade, 7:30 here on Wednesday, the 10th of September. There is a lot of news flow this morning, some of it of a geopolitical nature. Might that put a lid on our expectations for risk appetite for the equity markets this morning? Well, maybe it does. We don't know the counterfactual, but we're not looking to go a lot lower on that geopolitical tension. But there is a supportive factor in the shape of those tech results coming through from Oracle, so that could put some upward momentum behind some of the tech names. But there are a lot of stories in the mix this morning, Guy.
France is just France and Italy are basically kind of neck and neck at this point in terms of what we're seeing in the bond market. France is now definitely in the same territory as Italy, and I think that is probably the significant thing you need to think about. There you go, 3.477, 3.473. So we're pretty much in the same ballpark. In fact, we're almost exactly in the same ballpark. And this morning we do see a little kind of offer into French bonds. I'm assuming they are properly open now, but the situation that we now find ourselves in is that Italy and France are now basically the same. And we just heard what Camilla had to say about that subject.
France, an emerging market, apparently, according to her. Well, let's ask another expert on this, as we have French President Emmanuel Macron naming longtime ally Sebastien Lecornu to be the country's new Prime Minister. Lecornu will become the country's 5th Prime Minister in 2 years and will be tasked with steering a budget through the divided Parliament. Joining us now for more is Nabil Milali, Portfolio Manager at Edmond de Rothschild Asset Management. Good morning to you, Nabil. I want to ask you about your view on this new Prime Minister, because before he was chosen, you wrote that the political equation can no longer be resolved without the Socialist Party due to the intransigence of the National Rally. Is Lecornu bound to fail to pass a new budget?
Well, here in France we have a sense of déjà vu, because we find ourselves in exactly the same situation as 1 year ago after the departure of former Prime Minister Michel Barnier. Sebastien Lecornu will now be the 5th Prime Minister in 3 years, which shows the level of political instability that the country has not seen since at least the 50s. What is surprising here is, like you said, we end up with the same profile as the outgoing Prime Minister François Bayrou. While some were expecting Macron to appoint someone from the left wing of the National Assembly, he decided to choose another political figure from his own camp. Of course, Sebastien Lecornu is a political figure with a lot of experience. He is from the Conservative Party originally, before joining Emmanuel Macron. He was the defense minister, but more importantly, he was one of the closest advisors to Emmanuel Macron, and he was actually the one who suggested to him this idea of a great debate following the Yellow Vest crisis, which was a series of meetings between the president and the French people that helped diffuse the crisis back then. So probably Macron is expecting him to use this experience to tackle the social movement protest that is beginning today, and whose rallying cry is to block the entire country.
Yes, we are expecting some strike activity to take place, aren't we, today and then later in the month. Nabil, that's interesting context about the role that he has played. What message do you think the bond markets are sending right now? Are bond markets saying, actually, we're not going to insist that you tighten the budget story in France, we just don't want it to slip any further? Is that one message you could read into the relative stability of the French bond market story?
Yes, so far we didn't see too much pressure from financial markets, and especially from the bond market. We almost have the feeling that the financial markets and investors are resigned and can accept just some kind of slight improvement of the deficit, or maybe just a stabilization of this deficit. And this is why we think that Sebastien Lecornu will still have a very difficult political equation to solve. As you said earlier, without the support of the Socialist Party, he could face another motion of no confidence, and to get their support, he will have to make huge budgetary concessions, because the Socialist Party are very unlikely to accept the suppression of 2 bank holidays or the freeze on all social benefits increases or even some local spending reduction. They are asking for a 2% tax increase on the wealth of the richest households above 100 million euros, which so far is unacceptable for Emmanuel Macron and his camp. So it is very difficult to find common ground, and the main scenario is probably like I said, slight improvement of the deficit, and maybe markets can accept this, can see the glass half full.
Nabil, is Lecornu the last Prime Minister before general elections? Is this the final roll of the dice? If he fails, elections are necessary.
Well, the scenario of snap elections is still low, but the probability is definitely rising, mainly because the far right, the National Rally, is putting huge pressure on Emmanuel Macron. They want him to dissolve parliament and call for new elections. Clearly, Marine Le Pen sees an opportunity to seize power right now, because recent polls are in her favor, first, and second, she is facing a judicial problem because she was banned from running for elections, and she is hoping that by taking power she can change the law and be able to stand in the 2027 presidential election. So she's threatening to bring down any government, and Sebastien Lecornu's government as well, which means if we don't find any political compromise in the next weeks, and we have a deadline by early October, the new government has to present a budget to the parliament, then the probability of snap election will rise again, and it seems almost inevitable before 2027 if France stays in this political gridlock.
So is it going to take a crisis, Nabil, to get France to finally wake up and sort out its debt?
Well, that's what we saw in other countries that were facing similar budgetary problems. To go back to the public finances, the situation is not catastrophic, but it is definitely disturbing. If we start with the good news, clearly, France is not Greece. France does not have huge external vulnerabilities. When you look, for example, at its current account balance, it's close to equilibrium, whereas Greece's current account deficit was almost 15% in 2008. So, in other words, the French state has a financing problem, but the whole country does not have a financing problem. Actually, when you look at households, they have a saving rate, a very high saving rate, almost 19% in the first half of 2025. So despite what some doomsayers are thinking, we don't think that there is a probability of external intervention from the IMF or the ECB. Of course, there are some bad news, clearly. When you look at the deficit, it's almost 5.5% this year. As I said, we don't think there will be a huge improvement next year. And more worrisome for France is that France is diverging from the rest of the Eurozone with high debt to GDP ratio, but also a high public spending, which represents 57% of GDP, 7% above the average of the rest of the Eurozone. But as I said, finding common solutions between political parties is very difficult because it's very politically sensitive topics like the pension system or healthcare system.
Nabil, thank you very much for your time. We do appreciate it. Nabil Malali, Portfolio Manager at Edmond de Rothschild Asset Management, talking there about the French bond market story, the French fiscal story. Let us talk about what's been going on in Poland. We've seen that the Polish government has scrambled together a cabinet meeting, and we're hearing from the Prime Minister, Donald Tusk. He says there were no casualties in the drone incursion, but he does say that this was probably a, quote, large-scale provocation. So I wonder if that is interesting, that there's no attempt to perhaps play this down. Prime Minister Tusk also saying there's no need for any restrictions for citizens for now because they had been told to stay at home. Let us rewind and get the backstory to this. Russian airstrikes, Poland has had to scramble jets overnight to take down drones that were believed to be Russian. What exactly they were doing in Polish airspace is unclear. Poland has called this unprecedented and an act of aggression. Let us talk to Bloomberg's Oliver Crook, who joins us now. So what happened over the Ukraine-Poland border, Ollie, shrouded in a little bit of mystery, perhaps?
Indeed, and the sort of unprecedented dimension of this, Anna, because we have seen this happen before. We have seen projectiles, missiles, drones, and things cross into Polish airspace. So remember, in the early months of the war, there was a missile that overshot its target, landed in Polish territory, and that really provoked a lot of very sort of scary conversations in our newsroom and really across Europe about, does this trigger Article 5? And, it was sort of evaluated that it did not. But these were very sort of touchy subjects back at that period of time. The reason this is unprecedented is because it's the first time that a NATO ally has directly engaged with any sort of Russian military hardware. This was done over Polish airspace. They're currently now recovering what it is. They assume that it was drones. But again, this is going to be a very big question in terms of what the calculus was here. As we just heard from Donald Tusk, the Prime Minister of Poland, suggesting that this is sort of a deliberate provocation. We've heard from a couple U.S. lawmakers, including Dick Durbin, saying that this is a test of resolve to see whether or not basically NATO is willing to protect its eastern flank. We heard from Joe Wilson, a House Republican, calling it an act of war. And I think that there's a degree to which, whether this is a deliberate act by Putin to sort of test the boundaries, or this is just sort of indifference to kind of the sensitivities over Article 5, they both communicate the same thing, that this is a much bolder Russia, a Russia that over the last few weeks has done countless and sort of ramped up all of the attacks within Ukraine, targeting civilians. And the question is going to be, how do the Europeans respond? And critically, how does Donald Trump and the White House respond? Remember, he just met with the Polish president a couple of weeks ago and basically said that he was willing to commit more U.S. troops to Poland to sort of deter and safeguard Poland if that's what they wanted. And of course, coming in the context in just about 15 minutes time, we'll be hearing from Ursula von der Leyen, the State of the Union. Really, the message she's going to send is a Europe alone, a Europe that needs to take care of its own security. And we'll hear a lot more news on sort of the European plans on defense.
It's interesting. Volodymyr Zelensky saying that Russia launched 415 drones and 40 missiles at Ukraine. Just to kind of put this in context to kind of what we're talking about here in terms of the scale of what is happening in Ukraine right now. The possibility that this was an error kind of hangs there, but we don't know. And that's kind of the modus operandi, you could maybe argue, of the Russians over decades. Ollie Crook in Berlin, thank you very much indeed. You can draw a direct line, it seems, between what is happening in Europe right now and what has just happened between Israel and Qatar. Israel conducting an unprecedented strike against senior Hamas leaders in the Qatari capital of Doha. It's a move that is widely seen as escalating an already tense standoff between the country and Arab nations over the Israeli war in Gaza. Jemana Basetchi, Horizon's Middle East and Africa anchor in Dubai, joining us. Qatar has been working with the US to broker some sort of a ceasefire between Israel and the Palestinians in Gaza and Hamas. Where are these talks now? How does this change the narrative of the role that Qatar plays? What is the tone in Doha this morning as a result of the attacks that we've seen?
Well, it is a major diplomatic setback. State terror is the language that the Qatari Prime Minister Sheikh Mohammed used in a press conference yesterday. He was visibly angry and called it a violation, the attack on Doha, a violation of their sovereignty, a violation of international law. And he went one step further and said it's also a violation of moral standards because it is unprecedented and also an unwritten rule in diplomacy that you do not attack negotiating groups and you do not attack the mediator or the host country in the middle of negotiations. So a very clear escalation, very angry response from the Qataris. Now, they did go on to say that they are inclined to continue with their mediation efforts, but they are also speaking to the U.S. to ensure that an attack like this doesn't happen again. Of note here is that Israel had been targeting the chief negotiator from Hamas, Khalil al-Hayya, but they were unsuccessful. He survived the attack. What is to prevent a repeated attack from happening again? And this is the question I think that not just Qatar is grappling with, but other states, Arab states in the region are asking themselves as well. What is the value of hosting these talks? And also, what is the value of those so-called U.S. security guarantees if the U.S. were indeed given a heads up before the fact, but did not notify Qatar in time? All of these big questions. And meanwhile, the U.S. administration has been pushing to get their ceasefire proposal across the line. The Israeli Prime Minister yesterday said that they're willing to agree to the terms. We've not yet heard from Hamas.
Yeah, and if Donald Trump can't control Benjamin Netanyahu, where's next? Maybe he goes for the Hamas leadership in Turkey. Horizons Middle East and Africa anchor Jemana Basetchi, we thank you so much for that rundown from the Middle East. But coming up on the programme, we'll turn to Novo Nordisk, saying that it's going to slash 9,000 jobs globally, cutting its profit forecast for the third time this year. We'll get to you that and some other stocks to watch. This is Bloomberg.
Welcome back, 7:48 here in London, and we have a positive picture for us for European equities. This is partly being driven by technology and the Oracle news overnight, perhaps. We certainly have some geopolitical headwinds, but they're not knocking risk appetite entirely this morning. Let us talk to our Markets Live executive editor, Mark Cudmore, who joins us this morning. There is a huge amount of news flow this morning, Mark, but let's start by looking ahead to one of the big data points of the day. We're going to be looking at inflation in the form of PPI. Now, you do think this is a data point that matters. Give us what you're watching for.
Yeah, good morning, Anna. Normally, PPI gets released after CPI and largely gets dismissed. CPI is the more important component, and since PPI comes after it, it's kind of, well, we've already got the bigger signal. But this is one of the few times a year that PPI comes out ahead of CPI. And as some work from Brent Donnelly by Spectrum Markets has highlighted, if you have misses in the PPI, both on the core and the headline in one direction, that does have a generally statistically significant signal on where the CPI will miss. So we do need to pay attention to PPI today, because that'll give us a possible directional signal for CPI. That is the big data point we're waiting for to Fed next week. All that said, I think I'm someone who thinks that the inflation risk is being underestimated. I think that's going to be a big theme over the next year. That said, I do think that we'll move beyond the CPI and PPI data points quite quickly because the Fed is really the decider. And I don't think we can trade any inflation theme till after the Fed. So I think they'll only provide a short-term 24-hour window shock. And then we'll go back into focusing the fact that this Fed meeting next week will be dovish. That's supporting stocks, supporting bonds.
Mark, we've got futures racing ahead here in Europe this morning. Do you not think that the Russian drone incursion into Poland is going to weigh on sentiment at all this morning?
It was a really weird one, Lizzie, because we got a lot of chatter about that on social media. We're kind of keeping an eye. It took a bit of time to kind of get official confirmation of what was going on. But even then, there's been very little reaction there. Now, there was meant to be a big military exercise at the end of this week in Belarus and combined with Russia, which is why Poland was already expected to be closing its border. I don't know whether it's an advance wave of that. But this is a story that's so far been dismissed. We're keeping an eye on it, but it's not really driving markets at the moment. Yes, the news flow in Europe and geopolitical side seems very negative, but the backdrop at the moment is still relatively supportive for stocks. We've had positive earnings, and again, I reiterate, we've got that dovish Fed coming up next week, which is the really big anchor at the moment for both stocks and bonds.
Mark, what happens if stocks go down in America? And I'm not talking about kind of a 2-week blip that allows people to buy the dip. What happens if stocks go down properly? And is that something that is in any way feasible? Is it allowable that stocks go down at this point? If you're running an administration in Washington, can you afford to see stocks go down?
It's a great question. I think that the supposed administration put on the stock market is a lot farther away than people think. I think we both saw this in the first administration under Donald Trump. The supposed Trump put wasn't pulled until stock market had fallen almost 20%. And again, we saw a version of it in April. So I think from the administration point of view, sure, if there's a big drawdown in the stock market, they will react. But I don't think they'll be quite as sensitive or as short-term as people think. It'll require a very large drawdown.
Is the S&P too big to fail? Mark Cudmore, we thank you so much. Bloomberg Markets Live Executive Editor. And remember, you can get analysis and insight from Mark and his team by going to MLIV Go on your terminal. Let's get to your stocks to watch now. Louise Noon is here with that. Louise.
Morning, Lizzie. So we're starting off today with the Danish giant Novo Nordisk. A host of negative news from them this morning. So first up, they say they're cutting 9,000 jobs globally. That's about 11% of their workforce, with most of that in their home market in Denmark. That's with the aim of saving about $1.3 billion by the end of 2026. So really aiming to save costs there, part of a kind of wider turnaround for the company. As well as that, they've cut their profit forecast for the third time this year. So they're seeing about 10% growth. They had seen about 27% growth. So a lot of negative news. Would expect that to weigh on them this morning. Next up, we're also looking at tech and software companies. That's after Oracle's update overnight. Really aggressive outlook from them. Surprised Wall Street, had an impact on Asian stocks. So we're seeing if this will play through into Europe this morning. The likes of SAP, ST Micro, Infineon, been a mixed picture for them so far this year, but we'll have to see if this plays through into Europe on hopes of a good future for AI on the back of Oracle overnight. And then lastly, we're looking at Inditex, ending on a bit of fashion, the owner of Zara. They've had a rough year to date, down about 14% into the reds. They had their first half earnings this morning, but the thing that people are really focusing on is sales are starting to tick up into the third quarter, so pointing to a bit of resilience. There's been a lot of worries for the wider sector, consumer sentiment, trade tensions, poor weather, all weighing on the sector, but Inditex seems to be resilient in the face of that, so potentially providing a bit of a boost for them at open.
Louise, thank you very much. Louise Moon, our equities reporter. We'll also keep an eye on AB Foods. Disappointing numbers, it seems, out of Primark could weigh. But really, the tech sector is going to be front and centre, isn't it? Any read across into European tech names. And cloud is something that Europe does do from that Oracle picture.
Just don't ignore the synopsis story. A big in the chip space. That could read into Europe this morning, so just pay attention to that. I wonder if Wizz moves as well on the back of what we've seen.
We've seen their planes taking off, landing.
I've been watching the live shot, so yeah, they have been, but it just kind of raises a little bit of a red flag. Anyway, the opening trade is almost upon us. Futures are positive. We'll deal with the details next. This is Bloomberg. Wednesday morning, good morning. There is a lot going on this Wednesday morning. However, there is one story from a market point of view that seems to be cutting through the most, and that is what is happening with Oracle. Came late in the day, obviously, in the United States. The US markets, Europe went out here, US market rallies towards the close. That's one positive reason for stocks in Europe to be higher this morning and the futures picture to be higher. But the other one is Oracle. There's a lot going on. But that blowout outlook from Oracle seems to be, Lizzie, what's cutting through to futures this morning.
Yeah, look, there is a lot going on geopolitically on the Polish situation, this Russian drone incursion there. Kaja Kallas, the EU foreign policy chief, says that it was intentional. Donald Tusk says that the situation is under control. But look, no sign that this is going to impact European sentiment at the open. It's green across the screen. As you say, Guy, it looks like that tech sentiment, the optimism on Fed cuts is what is going to power this session today, Anna.
Let's talk about some of the individual stocks and sectors that could be in focus then, Lizzie. And let us start with what is going on in the pharma space. Novo Nordisk in focus, cutting 11% of their global workforce, cutting their expectations for the year, downgrading their performance for the year for the third time. So that's certainly something we'll be watching at the start of trade. AB Foods in focus. They own the Primark brand, of course, as well as other things. Like-for-like sales at Primark look to have disappointed some, and so as a result, that one could be a little bit weaker at the start of trade. But back to that tech theme, SAP could be in focus. This is all about cloud. The Oracle story has at least been all about cloud, and that sent the Oracle share price up by more than 20% in after-hours trade. So we'll look to see what read across there is into the likes of SAP. Temenos could also be on the move. Sage could be on the move as a result of some of this read across in the tech space then, Guy.
Absolutely. Fold in the synopsis story, it gets a little bit more interesting. But yeah, this looks like it's going to be a session brought to you by Oracle, basically. And we'll watch the data a little bit later on. Does PPI really change the narrative? Anyway, here we go. European market session is upon us. It is time for the opening trade. FTSE 100 is out of the gate. Wait and see exactly how names like AB Foods trade this morning. Tough day for the G's over at the Western family. We'll watch what happens there with that narrative. Stock 600 up by 0.2%. We'll see how tech performs. The IBEX is up by 9/10%. Strong performance coming out of Spain. We'll look for what's driving that in just a moment. CAC 40 will wait. Obviously, we've got a new Prime Minister taking over today. I'm not sure that's going to have much of an effect. We've also got demonstrations. I'm not sure that's going to have much of an effect either. The DAX and the SMI. There's plenty of names in the DAX that could be affected by the Oracle story. So look for names like SAP to be directly impacted by that. We'll see how that trades in just a moment. But at the moment, feels like a very front foot session, particularly, it seems, for the Spanish market. Lizzie, what's going on?
Well, let's break it down by sector, OK? So we've got half in positive territory, just under. Basic resources and energy leading the gains. So here you can see the geopolitical story feeding through. We've got oil higher, energy as a sector at 1.2%. But just diving into some of those individual names that you'd flagged, look, Novo shares down more than 1%. Inditex off to a flying start, up 5.8% off the back of those earnings. Louise was talking about this pickup at the start of the third quarter when it comes to Zara's sales. You had flagged as well that we needed to watch the tech names. You've got the likes of SAP, actually, we're waiting for S&P, but Temenos up 0.6%, Sage Group up 0.4%, so catching a bit of the mood music from the Oracle earnings as well. But look, when you look across the continent, as you say, it is a pretty tepid start, but green across the screen.
Yeah, I mean, most sectors in positive territory, though. Oh, well, that's how we started. Now some of them more fading into the red. But let's just linger on retail, because that's real outperformance from Inditex. Yeah. And I apologise to everybody watching for not making more of this earlier on. But at first glance, some of the numbers looked kind of... You know, they were in line with estimates. They didn't look terribly exciting. But the guidance around August, and this is post results, the guidance around August, the like-for-like pickup in sales that they've seen there, seems to have ignited the market, and that stock is up really strongly this morning. So we'll certainly keep an eye on that one.
So that's why the Spanish market's outperforming.
Yes.
Again, I'm remiss in not noticing that too. But if you look at the points gains this morning, Schneider... What does Schneider do? It basically provides a lot of the kit that goes into data centres. What is Oracle talking about? Data centres. What does ASML do? ASML provides the lithography equipment, but builds a lot of the chips that go into data centres. It's up pretty strongly this morning. Those are the two biggest points gainers, eclipsing Inditex, which is the third biggest point gainer. So Inditex is up by 6%, but it's the third biggest points gainer. It just tells you that the tech story, in terms of just the weight that it is adding this morning to the upside, is there. ABB is a similar story as well. Then you get into the banks, but then you get into some of the defence names, actually, which is interesting as well, which are also trading high. I wonder whether there's a defence narrative on the back of the Poland story this morning. That's where the gains are this morning. But SAP has just opened. It is now the biggest points gainer. So it is tech that is adding the weight to the upside. There are some idiosyncratic stories around Europe, like Inditex, that are doing well, but it is the Oracle story that is driving European performance this morning.
Yeah, and something like SAP, which is so attached to that cloud narrative, not perhaps up as much as one might have thought, up by 1.4% this morning, but it is, as you say, broadly the tech space leading us higher. And in points terms, that is a big business, so it matters. Let's talk to Maria Manici, multi-asset fund manager at M&G Investment Management. Maria, thank you so much for joining us. Let's start with the tech theme, because we've got plenty of geopolitics to talk about. We can get into that or leave it to one side. But let's talk about what's going on in the global economy around AI. Such enthusiasm. Oracle out with numbers last night that stunned analysts on the call, it seems. This structural change, how far through this structural change? How are you playing this structural change in the global economy?
I think what we're seeing happening in AI has really been the soundtrack of the last couple of years, really. There's a very important level of capital investment into AI that's really driven some of the sentiment around overall equity markets. And I think this is one of the reasons why we have seen markets remaining very resilient, even in the face of some very important challenges, both from a macroeconomic standpoint, as we see some of the labour market data in the US, for example, weakening, as well as political and geopolitical geopolitical standpoint. But there is certainly this part of the market that is AI-focused that is continuing to be a source of good news, a source of relief for investors, and a reason to continue to believe that markets can continue to go up.
Yes.
However, I think at this stage, especially in some areas of the market, we need to start being a little bit cautious.
Yeah. Do you start questioning the gains that we're seeing in some areas of US tech?
Well, I think in U.S. tech you have a story that is around capital investment and the potential that might lead to in terms of future earnings. And some of the valuations are not too stretched, but there are some other parts of U.S. market outside the tech space that have been having a good time because of what's happening, in the tech space and the good news coming from that.
So like energy, those kind of businesses.
And the Russell 2000 in general. But if you look down at the earnings and earnings trends and earnings expectations, they're not actually that great. So you have a danger there that, if those companies outside the tech space, outside the big investors, don't realize a pickup in earnings, you might have some disappointment.
So you're shifting towards non-US equities. It sounds like you're expecting a maybe correction in the S&P. We were talking about whether it's too big to fail. When does it come? How big could it be? How long could it last?
Well, I think you have an important distinction between the S&P and the Russell 2000, for example. You have some very different companies represented in these two indices, and therefore the outcome you're going to get is very different. You look at the S&P 500 today, earnings expectations have picked up much higher again, while in the Russell 2000 you have a very different picture. So I think it's about really looking under the bonnet and trying to identify for those companies that still have some very strong potential ahead, and the others that maybe have just jumped on the bandwagon and, leverage on this positive sentiment around tech and investment that what AI can bring. But then when reality kicks in, you really have to look at what the earnings are doing. And so far, on some of those companies, the earnings expectations not match the valuation and the price you're seeing on some of those companies. So we're cautious on that area, and we find better opportunities elsewhere within equities.
But also, you're looking outside the US, right? And it was interesting that you moved some of your exposure from the UK to Japan. That was at the end of July.
Yes.
That's before what we saw with the Prime Minister. Does that change your outlook for Japan when it comes to equities?
Well, I think when we look at Japan, there is a very long-term story there of changing corporates and the way they look at providing for shareholders. And that is a long-term story. In particular, throughout this year, Japan had lagged also from a price performance relatively to the other markets. And so we did see an opportunity earlier this summer to switch some of the capital back into Japan. And that proved to be quite an interesting call, because then since then we've seen actually Japan performing very, very well. So it's a long-term story that we like in terms of the earnings expectation we see for, again, some of the companies in Japan. We're selective and in this exposure, but the price performance this year have provided us with some opportunities in summer.
Isn't there an argument that says that the more worried you get about the US market, the less worried you should be? And the logic here is that this is too big to fail, to Lizzy's point. And if there's a problem with the stock market, the Fed's going to be there. And the Fed's got some room to cut right now. And whether or not the Fed should be cutting right now is is a question that we should maybe be addressing. But if you assume that the stock market can't go down a long way because of the wealth effect that it will create for the US economy, can you just assume that the stock market is just going to continue to rise? We're up at the moment on the idea that the Fed's going to cut. Now, if the stock market dropped by 30%, 20%, 10%, I'm assuming that the Fed would be there as well. As an investment case, does that hold water?
I think it's a very fair point, and it's one of the reasons why I think today in multi-asset portfolios you could potentially allow yourself to take a little bit more risk, because you might have this extra cushion coming from government bonds, which at this moment they're trading at quite elevated yields, and where you might get some benefit and decorrelation at some point when you enter, if you enter, a real risk-off environment. But for the time being, I think the point is also that investors are not exuberant about their views in U.S. markets, but at the same time, you're still seeing some investors.
What would exuberant look like? Do we need to go up another 10%, another 20%? If the earnings don't match, at the moment, the multiples on tech look okay.
Yeah, that's exactly it. I think you're still seeing some very strong earnings. And, that makes the valuation not excessive and make the argument for remaining invested quite strong. But elsewhere, outside these large caps, then the picture is a little bit different in the US.
Okay.
So this is where, to me, it's important to be a little bit more cautious, while at the same time, being very adamant about what are the inputs we're having from the macro data. I think the labor market shift that we're seeing right now and the data we're getting from the labor market are quite important, because they're telling us quite a lot about what's been happening in the US, potentially outside the large tech companies.
Yes. And what bearing does that have on the Fed? What bearing should it have on the conversations next week then, Maria? Do you think that this changes the narrative substantially around jobs, or it tells us more about what we already knew, that the labour market is weakening? I mean, what's the story that matters, do you think, to markets?
Well, I think for the Fed, it's still very much a balancing act. They are observing the labour market weakening, but at the same time, they have a very keen eye on inflation. So the data coming out later this week will be very important for markets, and I think there will be quite a lot of eyes focused on that, because there is still a risk that, despite tariffs are not seen as a long-term inflationary force, the potential impact of pass-through of costs to the consumer might be there. And although it's normally a one-step increase in prices, it's not all going to come at the same time. So you might be seeing that diluted over several CPI readings. And that's something that the Fed is still worried about. And, Jerome Powell has said it quite clearly in one of his last statements. And so the balancing act, that data dependency is still going to be there. But obviously now we know that the potential is more for interest rate cuts coming up, and the market is pricing this in.
So is there a CPI print that gives the Fed cover for 50? Is there a CPI print that derails a cut altogether? And we were discussing this before. Would 50 basis points completely panic the market?
Well, I think, we've heard from the Fed before that, and especially some people within the Fed, that they will favor bigger cuts and bigger increases over time, because that will be more impactful for markets and for the real economy as well. While, 25 bips, you need to really go on a trend in order to see some effect from that. So I think, it remains very much in the table towards the rest of the year and beginning of next year, what the path will be. Certainly what we're seeing in markets has been very, very interesting, because we have seen a very strong steepening in the US curve and also elsewhere. And that trend to us is appealing, because it makes the long end of the curve even more attractive in this phase, because the shorter end is already starting to price in some of those cuts, while the longer end has remained pretty much unchanged for quite a few months now.
Quick question on Europe. Just seen Ursula von der Leyen doing the rounds in the European Parliament. She's about to speak, giving a State of Union for Europe. What is the investment case in Europe right now? I look at what is happening in the United States. The tech story is driving everything. The defence story has been a big theme of the landscape. The banks have been a big theme of the landscape. We've just seen an incursion into Poland from Russia overnight. Is there a sort of geopolitical narrative that I can take and turn into an investment case in Europe right now? Is it the defence story? Is that what I should be watching? Where else should I be looking? Novo's down pretty hard this morning. Is that an opportunity? Where do I look in Europe to get some excitement?
Well, I think European stocks have been very interesting this year, and we started the year with a significant overweight position in European stocks, on the basis of attractive valuation and potential for re-rating. One of the areas that we really liked has been the banking sector in Europe, and we believe that there continue to be some opportunities there. Yes, valuations are not as attractive as they were, and even if you look on a longer time period relative to its own sector, European banks might not look as cheap, but they are still cheap in an absolute basis, and so we do continue to see that sector as attractive. In other areas, I think there is a little bit more difficulty of finding value, although healthcare is definitely flagging, but I think you have to go down single-name opportunities there.
Great to see you. Thanks for stopping by to see us. Maria Manucci, multi-asset fund manager at M&G Investment Management. We'll come back and show you what is happening in Strasbourg in just a moment. We're about to hear from Ursula von der Leyen. The President of the European Parliament is currently giving an introduction as we watch what is happening there. We also watch what is happening with the markets. This is what the Core 6 looks like this morning. A couple of standout stories in Europe this morning, one of which is Novo Nordisk, which now looks like it is positive on the news, but tech is the standout story, as you can see. ASML up nicely, Schneider up on the data center story as well. But a lot of green out there this morning. Let's talk about some of the individual names that we are watching. Retail front and center as well. Louise Moon has the details.
Exactly, retail front and centre. First up, we're looking at Inditex, the owner of Zara. Shares up over 6%, almost 7% into the green. That's after their first half earnings. But the key focus really is a pickup in sales for the third quarter. So pointing at a bit of resilience in the retail sector for Inditex there. Next up, we're looking at tech. A host of companies. We're looking at SAP, ST Micro, Infineon. That's after Oracle's blowout outlook that's fueling AI hopes. A surprise Wall Street had an impact in Asia and really playing through into Europe now, all into the green this morning. So good news on that front for them this morning. Next up, we're looking at Vistry Group, the UK-listed home builder. So their shares are falling after their first half, failed to impress, down almost 3% into the red this morning. That's after their first half update this morning. Next up, ABF, also listed in the UK, owner of Primark, also got a huge sugar unit that they've really been struggling with, and their shares are down almost 10%. That's after they say they see a bit of profitability uptick for their sugar unit, but things are still very negative, taking about a £200 million hit on a closure of a factory to do with their sugar unit as well. And then finally, we're looking at Pug. They are, let's see how they're looking. They're down over 8% into the red. That's after they're seeing revenue growth at the bottom end of expectations, so failing to impress the market at open.
Louise, thank you. Louise Moon from our equities team. We are keeping a close eye on politics. Ursula von der Leyen, the President of the European Commission, has started speaking at the European Parliament in Strasbourg. Let us take a listen to what she has to say.
Because our union is fundamentally a peace project. But the truth is that the world of today is unforgiving. And we cannot varnish over the difficulties that Europeans feel every day. They can feel the ground shift beneath them. They can feel things getting harder, just as they are working harder. They can feel the impact of the global crisis, of the higher cost of living. They feel the speed of change affecting their lives and their careers. And they worry about the endless spiral of events they see on the news, from the devastating scenes in Gaza to the relentless Russian barrage on Ukraine. We simply cannot wait for this storm to pass. This summer showed us that there is simply no room or no time for nostalgia. Battle lines for a new world order based on power are being drawn right now. So yes, Europe must fight for its place in the world, in which many major powers are either ambivalent or openly hostile to Europe, a world of imperial ambitions and imperial wars, a world in which dependencies are ruthlessly weaponized. And it is for all these reasons that a new Europe must emerge. And honourable members, this must be Europe's independence moment. I believe this is our union's mission, to be able to take care of our own defence and security, to take control over the technologies and energies that will fuel our own economies, to decide what kind of society and democracy we want to live in, to be open to the world and choose partnerships with allies, old and new. Ultimately, it is about having the freedom and the power to determine our own destiny. And we know we can do it, because together we have shown what is possible when we have the same ambition, unity and urgency. I must say I've lost count of the number of times that I was told that Europe could not do this and could not do that, in the pandemic, on the recovery plan, on defence, on supporting Ukraine, on energy security, and the list goes on. Every time Europe stood united and made it. And we need to do the same now. So, honourable members, The central question for us today is a simple one. Does Europe have the stomach to fight? Do we have the unity and the sense of urgency, the political will and the political skill to compromise? Or do we just want to fight between ourselves, be paralyzed by our divisions? That is what all of us have to answer. Every member state, every member of this House, every commissioner, all of us. And in my eyes, the choice is very clear. So my pitch today is a pitch for unity. Unity between member states. Unity between European institutions. Unity between the pro-European democratic forces of this House. I'm here, and the entire college is here, ready to make this happen with you, ready to strengthen the pro-European democratic majority, because it is the only one that can deliver for Europe. Honourable members, freedom and independence are what the people of Ukraine are fighting for every day. People like Sasha and his grandmother. Sasha was only 11 years old when the Russians attacked. He and his mother sought refuge in a basement in their town in Mariupol. One morning they went out to get some food, and that's when all hell broke loose. A rain of Russian bombs on a civilian neighborhood. All became dark and Sasha felt his face burning. He had shrapnel just below his eyes. In a matter of days, Russian soldiers stormed the city. They took Sasha and his mum to what the Russians called a filtration camp. Then Sasha was taken away. They told him he didn't need his mum. He would go to Russia and have another Russian mother, a Russian passport, a Russian name. They sent him to occupied Donetsk. But Sasha did not give up. On a stop on the way, he asked to borrow a stranger's phone. And he called his grandma, Ludmila, who was living in free Ukraine. Baba, just take me home. She didn't hesitate a second. Her friends told her she was crazy to go, but Ludmila moved mountains to get to him. And with the help of the Ukrainian government, she traveled to Poland, to Lithuania, to Latvia, Russia, and finally into occupied Ukraine. She got Sasha back, and through the same long journey brought him to safety. But their hearts are still broken. Every single day they keep fighting to find Sasha's mom, stuck somewhere by Russia's brutal war. I would like to thank Sasha and Ludmila for allowing me to share their story. I'm honoured that
we're listening to Ursula von der Leyen, the President of the European Commission, talking in Strasbourg, addressing the European Parliament with her State of the Union address, talking about a new world order based on power and saying that in that context, Europe must fight. Those words perhaps designed to land eastwards, perhaps designed to land westwards, talking about dependencies in this new order being ruthlessly weaponised. So certainly a host of sound bites in the early part of that address by Ursula von der Leyen, and saying the key question: does Europe have the strength to fight? So there's the geopolitics, Guy. There's plenty of it this morning.
Let's turn to some of the corporate news we are watching so carefully as well this morning. Novo Nordisk shares are now gaining. This after the Danish pharma giant said it will cut 11% of its workforce by the end of next year. That's around 9,000 jobs. A lot of those will be going in Denmark. We've got a new CEO certainly making a mark on this company. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceuticals Analyst for Bloomberg Intelligence, joining us around the table. Sam, good morning. New CEO, new plan. Is this what we should have expected? Is this enough from the new CEO at Novo to right the ship?
Morning, guys. So just the first thing to say is this is the first time that I've ever seen Novo Nordisk do anything like this in terms of job cuts. It's always been the opposite. Breakneck growth, trying to hire, hitting labor laws to the limits, right? So what we've ended up with is, if you look at the press release, there's a few things in there that are quite interesting. They want to spend more money on R&D and innovation, etc., and commercializing their drugs in a dynamic market. I think it's telling us that they're having some revisiting of what it is that they need to be doing and the cash they need to spend at the time where growth has slowed for them. They were, I think, budgeted or staffed for a massive 10, 20, 30% growth per year in an obesity market, which is still there, but not at the same pace. And the dynamics against them have been quite tough. The compounding is something that they've not been able to stop in the US. The FDA is not doing what it needs to do. It's illegal at the end of the day. And they've also got a very strong competitor in Eli Lilly with a drug that's arguably better. So we're here. What was interesting in it, though, I found also, is the comment about we need to move to a performance-based culture. Well, what was it before? I thought most companies work on a performance-based culture. I think that's a result of having needed to grow so fast. You didn't need to think about performance because the growth was just coming in.
So is this enough, then, to turn the tide? They're down 61% in the past 12 months. Is it enough to take on the competition?
Yeah, but if you think about what he's trying to do is trying to right the ship in terms of investing more. That would take time to come through. So there probably will be some value to gain by redirecting some of the saved cash to the way they're commercializing the drugs, more direct to consumer. That's a very different model where you had one buyer essentially dealing with you. You now have a system where you need to fulfill a very different channel. So that might be more costly, but also R&D. The R&D part will take time to come through.
Sam, we're going to leave it there. Thank you very much indeed for the analysis and the updates. Sam Fazeli working his way through carefully what is being said this morning, Director of Research for Global Industries and Senior Pharmaceutical Analyst for Bloomberg Intelligence. I want to take you back to the live shot that is in Strasbourg right now. As you can see, you have an ongoing speech by Ursula von der Leyen. Has she just finished? It looks like there's a standing ovation currently for that speech within the Parliament. We'll continue our analysis of what has been said. You are watching the opening trade. This is Bloomberg.
This is the opening trade. We're 30 minutes into today's session, and we've got an avalanche of news for you this morning, whether it's on the geopolitics, whether it's on tech, whether it's on the single stock stories. You've got the Inditex outlook driving gains for the Spanish IBEX this morning. It is green across the screen. Those Oracle results really powering tech. And really, it looks like we're looking through what has happened in Poland when it comes to geopolitics, Guy.
Absolutely. It does seem as if that tech narrative, plus a few corporate pieces of information out of Europe this morning, are the main narrative. You can certainly see that the internals look quite positive. 423 stocks higher, lower 155. Volumes a little on the light side. There's a bunch of 52-week highs out there that are quite interesting as well. Airbus tracking at a 52-week high this morning. I think that's interesting. The stock is up by 1.2%. That's a positive kind of story, narrative for the global economy, the European economy, the French economy, the European economy, I should probably say more broadly. IAG hit a 52-week high. Now just looks like it's rolling off that this morning, but is it a 52-week high? Has hit a 52-week high this morning. And the banking sector seems to be on the front foot once again in Europe, which is also, I think, quite positive as well. Santander up by 0.3%, tracking to a 52-week high, Anna.
Let's talk about some of the other stories that we need to get up to date on this morning and keep under our radar. President Emmanuel Macron has named longtime ally Sebastien Lecornu as France's new Prime Minister. Lecornu, a former defence minister in a previous cabinet, is set to become the country's fifth Prime Minister in just 2 years. The US President Donald Trump has publicly criticised Israel's decision to launch an attack on Hamas in Qatar. Trump said the strike, quote, does not advance Israel or America's goals. Qatar says it reserves the right to respond to the attack. And staying with response from the US president, Bloomberg has learned that President Trump told European officials he's willing to impose new tariffs on India and on China. This in a bid to push Vladimir Putin to the negotiating table on Ukraine. Trump added he'd only introduce the tariffs if EU member states do so as well. And that is interesting. We're still listening to Ursula von der Leyen speaking in Strasbourg with her State of the Union address, Lizzie, and she's talking about tariffs, but she's talking about further tariffs, another package on Russia. They're working on that behind the scenes, it seems, but a little bit less mention so far, at least, of the relationships with China and India.
Indeed, she says Europe must fight. She's called for a new Europe. She's called for this to be Europe's independence moment, Anna. A real standout speech, this from VDL. It is her first State of the Union speech of her second mandate. She's saying that Europe must take care of its own defence and security. Oliver Crook has been listening for us in Berlin. Let's go to him now. Ollie, what have you taken away as the key lines from this speech so far?
The actual news value and kind of the incremental news that we've gotten from Ursula von der Leyen over the last few minutes, she's now confirmed that it was actually more than 10 drones that crossed into Polish airspace. This is something that's a late addition to the speech, obviously, because this only happened fairly recently. She's also announced a new program to help build out the Ukrainian military. This is probably in part the fruit of the conversations we had the other week in the Coalition of the Willing talks in Paris. But she also said that there will not be any touching of the Russian frozen assets. So this is a speech that really has begun and sort of framing the full conversation. But in terms of the first sort of policy issue, the first policy item that von der Leyen is front-loading is this question of defense. So in order to sort of draw the broader picture, and this is actually, I think, the key here, the most powerful lines that we got from Ursula von der Leyen, she said that the battle lines for a new world order based on power are being drawn right now. So yes, Europe must fight for its place in the world in which many powers are either ambivalent or openly hostile to Europe, and that a new Europe must be born, and that the question in this sort of new world is Europe, does it have the power to remain relevant? And the question she posed to lawmakers in Strasbourg today is, do you have the stomach to fight? Do we have the unity to support the sense of urgency? And do we have the political will, critically, the political skill to compromise, or will we just fight between ourselves? And that is, of course, the critical question. Take no other example as France, that can't even get its own government in order. Are they willing to relinquish some degree of sovereignty in order to contribute more to the big European project in order to keep the bloc relevant? That is the difficult line that von der Leyen has to walk, not just today, but for the rest of her commission, which is trying to bring a much more federated Europe into being in order to compete on the global stage.
Yes, she chose to start her speech, as no doubt she'd planned to do, with these big questions around security, around defence, Ollie, which was interesting. And then she did get to Poland, and she got a standing ovation from the room when she said that Europe stands in full solidarity with Poland. Tell us a little bit more about these developments overnight and how they shape our thinking around what's taking place in Ukraine right now.
Yeah, so Anna, the sort of most relevant and most recent piece of information we got from Ursula von der Leyen herself, as I just mentioned, more than 10 drones, apparently, Iranian-made drones, at least those models, cross into Polish territory. The reason that it's significant, Anna, we've had these sorts of incursions in the past. Generally, they were considered to be accidental. You'll remember in the early stages of the war, a missile hit that overshot in Ukraine, and there were some really uncomfortable, very worrying conversations about Article 5, whether or not this was triggered. Fast forward now a couple of years, the reason this is relevant is because it is the first time NATO forces have engaged with Russian military hardware, shooting this out of the skies over the Polish airspace. Polish airspace had closed for a prolonged period of time. As a consequence of this, the question is, what will the European response be? What will the American response be? What will Donald Trump's response be? We've heard from a few of the more hawkish pro-Ukrainian lawmakers in the United States saying that this is just basically a provocation, Putin trying to test NATO. That will have to wait for the appraisal of the President of the United States. Is this a test of NATO? Is this a mistake? The question is sort of irrelevant, because at this point it is clear that Putin is much more emboldened than he was even a few weeks ago.
Oliver, great stuff. Thank you very much indeed for the update and for continuing to listen to the speech and taking the key points away from it. Oliver Crook joining us from Berlin. Ali Redison, Associate Director at SEC Newgate and former advisor to the UK Business and Trade Secretary, joining us around the table this morning. Good morning.
Morning.
Ursula von der Leyen posing lots of questions. Does Europe have any answers?
I think there's a reason that she's stressing the foreign policy consideration, and part of that is because in terms of what she wants the EU to be able to do to respond, there are some sovereignty issues. There are a lot of member states that do not want to give some of that power away, whether it comes to sort of a joint sort of defence lending, sort of sovereign debt being sort of pooled and collectivised. And I think that her argument here is basically saying this is on our borders, we need to deal with it, but you need to actually work with us member states, not just members of European Parliament. Now, on the answers part, it's interesting that she will focus on foreign policy, because I think if you look at the things that she'd committed to doing, even in the sort of hangover from her last term, domestically, integrating the single market, private sort of capital markets union, those things are going very slowly.
They are going very slowly. What has happened in Poland overnight, as we start to see maybe events pushing into European sovereign space, does that solve some of the problems she faces, though? There's nothing greater to unify than a foreign adversary. So far, Putin has not provided enough of an adversarial element to provide unity within Europe. But do you think we're getting to that point? Like, if we see more and more incursions, is that the catalyst for cohesion?
Yeah, and I think that, even though they're announcing more sort of sanctions package, we've had some Hungarian opposition, but I think her argument is really to Germany, for example, which is saying, well, we're going to stop short maybe of sort of giving you all the money that you want to do some of this joint defence sort of lending program. I do think it definitely helps make the case, and also in terms of trying to get the Americans on side, because one of the problems for Europe has been that, President Trump really wants to sort of get to this sort of peace arrangement, and is starting to see Europe as a sort of an obstacle to that. I think the more incursions you have like this, the more you can justify, if you're Ursula von der Leyen, why you need to carry on sort of doing this defence pooling, and also have American support.
Ali, let me ask you about something that's come onto our news agenda because of some of our reporting, and this is the suggestion that President Trump has told European leaders that, yes, he will impose some kind of secondary sanction on China and India aimed at those who buy Russian energy, and in the view of many in the Republican Party in the United States, therefore, fuel what Putin is doing in Ukraine. Where does that idea go in Europe? Does it just sort of does it come to anything? I mean, is there any willingness in Europe to widen the sanction conversation from not just Russia, but those that are buying energy from Russia?
Yeah, I think it's a huge challenge for the EU, because one of the things that the EU is trying to do right now is, A, kind of balance its relationship between Washington and Beijing. There was a report a year ago from Mario Draghi sort of saying we needed to take a tougher line with China. The EU's done some of that, for example, on sort of levies on solar panels. But really, I think the India question is a huge one, because they are trying to conclude a trade deal by the end of this year. That does not sit well with trying to take a tougher line on tariffs. And I think, if you're a cynic, you're looking at that and saying definitely there's a lot of push from Republicans in Congress to encourage sort of secondary sanctions. But we also know that Trump has a big problem with India because of the level of its tariffs. So there's a two-pronged game going on here.
Yes, there is. And Europe, it's at least Ursula von der Leyen choosing to focus instead on further sanctions being placed on Russia, that kind of package. I mean,
Correct.
Is there anything that can be done that has not been done yet?
I think that you could start looking at the secondary sanctions. I mean, there are some in terms of looking at how you engage with China and India. You could take a tougher line, I think, on China in particular, if you're Europe. There's been there were a lot of calls to actually open sort of trade defense investigations against what China is doing. Those have not materialized. So that doesn't mean that you can't talk to China about investment, but I think the EU could be taking a tougher line on where it sees China dumping on its market, particularly in response to being effectively shut out by the US.
Ali, given your former role advising the UK Business and Trade Secretary, let me just look ahead to the UK hosting Donald Trump next week. I wonder how VDL will be looking upon that, and also what Keir Starmer should be angling for when he's already got this trade deal in the bag.
Yeah, I mean, it's interesting that the same issues that the EU is facing from the Trump administration the UK has, and that's namely around this kind of free speech argument, that basically the way in which your digital economy, your online space, the way you are regulating the internet. For the EU, it's the Digital Services Act. For the UK, it's the Online Safety Act. Trump and the Trump administration, particularly Vice President Vance, sees that as a sort of incursion against human rights, against free speech, and wants this sort of implementation of that by regulators both in Europe and the UK to sort of basically back down. And I think what Brussels will be watching very carefully is to see, does Keir Starmer make any concessions that actually the way in which our regulator, Ofcom, is implementing that, is that unfair to American companies, and does he try and pull them back?
Well, it's interesting that Starmer's just changed his Business and Trade Secretary to the former Tech Secretary, Peter Kyle. Do you think that reflects on the shortcomings of the former Business Secretary, Johnny Reynolds? Do you think it signals a change on tech policy, trade policy? when it comes to the Starmer administration?
I think it's more of a reflection of the increasing intersection for the UK and for Europe and US trading partners of how much the US administration cares about the intersection of tech and trade policy. We have to remember that actually when this kind of framework deal outline was announced as an ambition between Starmer and Trump back in February, it was supposed to have technology at its heart, and I think this is just shoring up that position.
Ali, great to see you. Thanks for stopping by to see us. We always appreciate it. Ali Redison, Associate Director at SEC Newgate and former advisor, as we've just heard, to the UK Business and Trade Secretary. I want to take you back to what is happening in Strasbourg right now. As you can see, we had the ongoing speech of Ursula von der Leyen, talking tough but posing questions that Europe will find difficult to answer. She is currently talking about Poland. Let's take a listen to what she has to say.
But in the longer term, the only realistic peace plan is based on two states, living side by side in peace and security, with a secure Israel, a viable Palestinian Authority, and the scourge of Hamas removed. That is what Europe has always stood for, and it is time to come together and help make this happen. Honourable members, the transition is now hard. I want to speak about competitiveness. I know, but this is a State of the Union, and competitiveness is a central piece of our European Union. Europe's independence will depend on its ability to compete in today's turbulent times. We have everything it takes to thrive here in Europe, from our single market to our social market economy. But we know the economic and geopolitical headwinds are strong, and I just talked about it. And we have seen how dependency can be used against us. And this is why we will massively invest in digital and clean tech. With more to come in our Future Competitiveness Fund and a doubled horizon, our research and innovation programme, and we are tackling the key bottlenecks identified by the Draghi report. That's from energy to capital, from investment to simplification. We have held strategic dialogues with key industries.
Ursula von der Leyen's State of the Union in Strasbourg. If you want to continue to monitor that, you can do on your Bloomberg terminal. We'll come back to the other news that we're monitoring, and there is plenty of it this morning. That will be next. This is Bloomberg.
Welcome back to the opening trade. 47 minutes into a session that tells an interesting story around what the market is really focused on and what it isn't. But for the European picture, for the main markets, the biggest markets around Europe, this is a story of positivity. The Oracle numbers overnight pushed tech stocks higher. That continues to be a theme here that we're seeing in Europe. Also, retail doing really well. The Inditex numbers pushing the market higher in Spain also. So we see strength, certainly, in many of the larger markets around Europe. That's not the case for Polish assets, though. We see Polish energy names and other companies listed in Poland really under pressure today, and that's very nicely represented by the red on this map to the right-hand side of Europe, as you can see there. We've also heard from the Polish president, and it's interesting to think about the Polish president saying things that you wouldn't be surprised to hear from the Polish prime minister, and remember, they come from different political traditions. So here we are hearing from the Polish president, Nawrocki, talking about how Poland will have full information within 48 hours about what has happened overnight. This incursion of Russian drones into Polish territory. Says the drone attack is unprecedented in NATO history, and Poland discussed the possibility of NATO Article 4. And so as a result of that, we wait to hear what the United States has to say about what has happened in Poland overnight.
So we await the latest on the geopolitical situation in Poland. We also monitored the geopolitical situation in the Middle East. Israel conducting an unprecedented strike against senior Hamas officials in the Qatari capital, Doha. Now, it's a move that's widely seen as escalating an already tense standoff between the country and Arab nations over the war in Gaza. So we can get more with Jemana Basechi now, Horizons Middle East and Africa anchor out of Dubai. Jemana, welcome back. Is Donald Trump lost control of Benjamin Netanyahu here? Is Turkey next on Netanyahu's list?
Well, I think you're referring to the fact that another red line in the region has been crossed. And the first red line that we spoke of a couple of weeks ago was those very pointed statements put out by the UAE Ministry of Foreign Affairs stating that the potential annexation of West Bank would be deemed a red line. This takes it one step further, and you only have to look at the reaction that we got out of the Qatari Prime Minister yesterday, visibly angry, calling this an act of state terror, a violation of international law, of sovereignty, and going one step further and saying that it's also a violation of moral standards as well, because there is an implicit diplomatic understanding that you don't go after negotiating teams and you don't go after the host countries that are involved in these mediation attempts. So very strong response out of Qatar. However, they did say that they are inclined to continue with their diplomatic efforts, but have also reached out to the U.S. to ensure that an attack like this doesn't happen again. And that is key here, because Israel were targeting key Hamas negotiators. They were unsuccessful in their attempt to kill Khalil al-Hayya, who is the chief Hamas negotiator. What stops them from attempting this once again? And indeed, this morning, the Israel Defense Minister, Israel Katz, also said that there is nowhere to hide for their enemies in Hamas. Anyone who was directly or indirectly involved with October 7 has become a target. So this is a time of extreme alert for countries in the region, questions about what this all means for a potential ceasefire breakthrough. But I think it's fair to say that this has set back the diplomatic efforts substantially. And we're waiting to hear a full statement out of the U.S. later this afternoon. President Trump said that he wasn't thrilled with what happened, but at the same time, he's not against the goal, the ultimate goal of eliminating Hamas. But yet, stronger statement from the U.S. and perhaps what the GCC countries would like to hear is something more to the effect that U.S. security guarantees will still hold in case something like this pops up again.
It's interesting you think back to the recent tour of the US president to the GCC and the impact that had. Jemana, thank you very much indeed. Horizons Middle East and Africa anchor Jemana Basechi joining us on the latest out of the Gulf. Let's turn our attention to European politics. And the French President Emmanuel Macron has named longtime ally Sebastien Lecornu as the country's new Prime Minister. Lecornu will become the country's 5th Prime Minister in just 2 years and will be tasked, of course, with steering a budget through a divided Parliament. Will he succeed? What happens next if he doesn't? Bloomberg's Caroline Conan is in Paris with the latest. The former Defence Minister, longtime ally. We've got big protests coming up in Paris today. What has been the reaction thus far to his nomination?
He's one of the closest allies to Emmanuel Macron. In fact, he's been in every single government since Macron's first election in 2017. And in fact, Macron wanted to name him Prime Minister already back in December to succeed Michel Barnier until François Bayrou convinced him to choose him instead. Now, of course, this may seem like a provocation for the opposition parties. The socialists were quick to react last night, saying that none of their lawmakers will join this government. One socialist, Philippe Brun, even saying this was a slap in the face for the parliament and for voters. Of course, the Republicans, however, are pretty happy with that choice. We'll see how Lecornu manages to pass a budget. Of course, he will still face a fragmented parliament, but he's considered a very good listener and negotiator. He's even had dinner with Marine Le Pen and Jordan Bardella, reportedly back in spring, even though that doesn't mean that Marine Le Pen will necessarily support him. She's still calling for new snap elections. Today, of course, a first big challenge for Lecornu. There are some kind of disorganized protests planned across the country, perhaps some acts of sabotage, some roads already blocked in some regions around Lyon, Montpellier, around Normandy. Nothing too spectacular at the moment, but of course the situation may evolve in the afternoon with some radical left groups taking the streets. And of course, then the next challenge for Sebastien Lecornu will be a more structured strike next week, next Thursday on September 18, and then he'll have to pass a budget before the end of the year.
OK, Caroline, we thank you so much. Out of Paris, been both Caroline Gonan. As we look at the CAC 40, up to a flying start this morning, up about 0.8%. But as we look to what else is on the agenda for today, at 12:45 p.m. we hear from the S&P's Martin Schlegel. We're going to hear at 1:30 p.m. From the US's latest data. That's the US PPI numbers. And then at 6 p.m. we get that US 10-year note auction. But I know that someone is very excited about this inflation data, and that is Bloomberg's Valerie Teitel. Val, how much does the PPI matter? It's unusual that it's coming before CPI. Really, though, could it change anything for the Fed?
Well, last time around, remember, PPI came in exceptionally hot, hotter than CPI has done in the last few months. And I think there is a narrative starting to build that PPI inflation could in some way creep into consumer price inflation via goods inflation. So we might get another reading that would boost that kind of argument today. And that's why some have said, I know Mark Cudmore was on here saying that he thinks all this pricing of a 50 basis point rate cut next week by the Federal Reserve is a bit exuberant, given we're likely to get some hot data prints today, starting with PPI and then again CPI tomorrow, likely to show that core inflation is at 3.1% for a second month in a row. Above a 3% handle is something perhaps maybe the Fed isn't comfortable with. But remember, the Fed looks at forward-looking data. It's not just spot data they take into account. They also think about what's going to happen moving forward. And Jerome Powell has called this tariff-induced goods inflation just a blip in the road of the broader deflation trend.
Do the Oracle numbers tell me that I need a rate cut from the Federal Reserve?
Look, they did stun Wall Street by a huge amount. Oracle up 28% after hours. But I think it does show, again, that what the U.S. equity market is telling us could be very different from what's going on the ground of the U.S. economy. We know the AI trade has not been hampered by higher rates, and we're seeing more and more evidence of that. And with the S&P notching yet another record high yesterday ahead of this inflation numbers.
OK, Val, we thank you so much. As we look ahead to those PPI numbers out later on today, Valerie Teitel. Well, we are continuing to monitor this speech from Ursula von der Leyen, the European Commission President, in Strasbourg. She says that they need a trade instrument to succeed the steel safeguards. That speech continuing as she says that they need to have an independent Europe in the face of the defence and security challenges facing the continent right now. That's it for the opening trade. The Pulse with Francine Lacroix is coming up next. Stay with us. This is Bloomberg.